If you only looked at the headlines after Tesla's third quarter earnings report, you would think that the company had failed miserably to impress investors. The stock is already down about 45% year to date, having fallen 28% just in the last month. Tesla reported what Wall Street is viewing as a mixed quarterly report, missing on revenue but beating on earnings. This sent the stock down 6% in after-hours trading. It was an all-time record quarter for automotive, energy, and services revenue, and yet there are just a few key numbers that Wall Street focuses on in order to rapidly determine whether to buy or sell the stock as soon as the earnings report hits. For instance, at a quick glance, Tesla's margins were down year over year in multiple areas, such as automotive gross margins, total gross margins, and EBITDA margins. And even if you compare them to the first quarter of the year, which historically is not the strongest quarter, margins were down even more significantly from this time period, with automotive gross margins down a staggering 5%. However, as with many of these earnings reports, if you zoom in too much on the financial details, you'll miss the real story and the long-term trends at play. Elon Musk quietly described some insane developments occurring at Tesla, which didn't at all make it into the headlines, but they might make it into the financial results over the next few years. It's almost as if Wall Street likes to play a game with retail investors by shaking them out of the stock, making it seem like a bad quarter, even though there's no need for a silver lining. The earnings results were extremely impressive given the backdrop, but even more so are some of Tesla's massive bets just about coming to fruition. And before I continue, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. Elon Musk opened up the conference call by stating that Tesla will have an epic fourth quarter, and that Q4 is already looking extremely good. That should have set the tone for the entire call, since everything that was reported is already behind us. Investors should be looking at what's in the pipeline to determine where the company and the stock should go instead of looking in the rearview mirror. The main concern going into the quarter was this made-up notion of demand fear that just keeps showing up over and over again. It's interesting because there's never a fear of demand for General Motors or Toyota or these other legacy automakers. It always seems like business as usual for them, where if demand is low, which it is, it will simply pop back up in the future. And one reason for this may be because the vehicle market is large and fairly consistent. Historically, it moves down and moves back up, and the typical players are usually still around. It's funny because for years retail investors have been trying to convince Wall Street that Tesla is a tech company, not an automotive company. But Wall Street is sort of viewing it as a tech company, looking with a fine-tooth comb at anything that can stunt growth and selling it off if they see a flaw. Whereas traditional auto companies just lumber around and no one is overly concerned about their fluctuating sales. But Tesla is selling into this quite large and fairly predictable auto market, and they even provide this chart trying to explain that they only have a 1 to 3% market share depending on the geography, meaning there should be plenty of room for growth. On the conference call, Elon Musk reiterated, for quite possibly the 100th time, that Tesla has excellent demand. They expect to sell every car they make as far into the future as they can see. Tesla also has so many levers that they can pull to boost demand if they need, such that there's truly no concern. So anyone talking about demand concerns either purposely is trying to push down the stock or is just reading the headlines and doesn't actually pay attention to Tesla's conference calls. Now, there are a handful of things that impacted this quarter's profits. The first is higher costs in logistics and commodities. They're taking a number of further steps to improve this, one of which is trying to flatten out their deliveries. They always get this end-of-quarter spike, which costs them a lot of money in expedited shipping and getting more ships and trucks, etc. The right thing to do is to flatten it out to save money on extra fees aimed to get shipments done by the end of the quarter and to make use of the resources they have or are paying for, but are underutilized at the beginning of the quarter. Elon Musk has been talking about this for quite some time. Now Tesla is actually forced to fix this. The goal is to get the total deliveries or the area under the curves to be the same, but move to the more consistent delivery schedule. they said that 2/3 of all of their deliveries were done in the last month of the quarter. So Wall Street may not be happy about this change, at least temporarily, since it means that Tesla doesn't really care if there are a lot of cars in transit at the end of the quarter that don't get counted in the quarterly numbers. But actually, this will fix itself over time. For instance, the 20,000 in-transit cars that Tesla had at the end of Q3 will simply show up next quarter in Q4. And so you get some extra deliveries at the beginning of the quarter, which roughly cancels out with the deliveries that are pushed off at the end of the quarter. No real difference, except this actually allows Tesla to deliver more cars because they would no longer be hitting their peak logistics, such as running out of trucks and ships. And secondly, Tesla saves a whole bunch of money. So this has to be viewed as a very positive thing going forward, which will help Tesla's earnings. Now, commodity costs have also risen, affecting profitability, but are now starting to drop back down in some cases. Except that one of Tesla's key inputs for batteries, along with others, is lithium, which continues to rocket higher in price. So far, Tesla has tried to mitigate this by raising prices on consumers. But a more effective way that Elon Musk subtly added on the conference call is to tackle the root cause, the supply of lithium, which is why Tesla is building their own lithium refinery. At Battery Day, they mentioned mining lithium as well, and there's a question on last night's call about mining, and Elon Musk vaguely answers the question by saying that they will do whatever they need to, but he says he sees radical improvement in supply chain and battery cell efficiencies that will result in a reduced amount of capital required beyond what people think. So the lithium material itself isn't a problem, it's the refining of it, and Tesla is getting into that business to ensure the stability of their supply chain. This is pretty important, and it could put a lot of pressure on reducing the price of refined lithium that goes into batteries. It's still a commodity, and so increasing supply even slightly could have a drastic effect on lowering price. Another thing that affected profitability is a negative $250 million impact on currency due to a strong US dollar. While the euro's been getting crushed all year, the Chinese yuan has been a bit harder to predict, with it stabilizing mid-year, but then the dollar gained on it quite significantly. This affects a large part of Tesla's business since they operate in China and in Europe. They can counter by raising price in other countries to reflect the conversion to US dollars. Tesla already does this, but the currency change happened fairly quickly, and so increased prices only apply to a new car purchased today. But Tesla is delivering cars that were ordered weeks or months ago and locked in at lower prices. So this may catch up in future quarters, especially if the currencies stabilize a bit more. But really this is sort of dumb to focus on, and investors should look past this. It's definitely a real expense, but it could reverse just as quickly. It's basically causing fluctuations that aren't really related to the core business. Tesla is executing extremely well, and they get hit by currency changes at the end of the quarter. If the currency was in Tesla's favor, but the execution was terrible, you wouldn't be congratulating them. But now we have great execution and unfavorable currency, and they're being punished for that. I think this may last for a few quarters, but over a longer period of time, it's not meaningful. Now, profitability was also impacted due to Giga's Berlin and Texas's ramp up. They say this highly affects margins, something analysts are very concerned about, but not so much profit. I think that's because these factories appear to be contributing to profitability, as stated on the call, just very slightly. So profit may be higher, but not that much higher as one would expect given the record delivery numbers. I think this will change as volume increases over the next year at Austin and Berlin. Now, say this relatively small number of cars from Austin and Berlin contributes a very low 1% to margins. When you combine that with Tesla's 30% margins on the rest of their vehicle, the weighted average gets dragged down a little lower than the typical 30%. So if you're disappointed because of the lower margins, as analysts are always focused on, this problem goes away. If anything, margins should begin to increase drastically over the next few quarters as volume goes up at Giga Berlin and Giga Texas. So there's nothing inherently wrong with the company. Tesla is just being punished for ramping up 2 factories at once, which is why you should be thankful that Wall Street analysts are not the ones making the decisions at this company. Now let's shift gears and forget some of these financial minutiae and look at some clues as to what's coming from a fundamental perspective. It's still October, the first month in the last quarter of the year, and Giga Texas may surpass 2,000 vehicles per week within the coming week, something that Giga Berlin achieved last month. That's about 100,000 cars per year so far with each factory and counting. Furthermore, they tripled their production rate of the 4680 battery cells since last quarter. This ramp up seems to be faster than the 35% monthly growth rate Tesla told us about last quarter. It's closer to an insane 44% month-over-month growth rate. If they keep that up for a year, they can 80x battery production. And suddenly, Elon Musk is talking about trying to achieve 1,000 gigawatt hours as fast as possible, not including suppliers. Their goal of battery day was 100 gigawatt hours by 2022. I don't think they'll achieve that, but the ramp up seems to now be moving at light speed. Elon says it's finally gaining rapid traction, expecting it to be a significant part of production in Texas in the coming months. This is huge for Tesla and shouldn't be overlooked. Although more work is needed long-term to secure supplies, etc., battery production is their core bottleneck, and their execution on 4680 will be game-changing. This also helps to unleash production of battery storage products, as we're just in the early innings, seeing Tesla's energy deployment starting to break out this quarter with a new record, up 85% over last quarter. The 40 gigawatt hour Megapack factory is just getting started. It can add 10 gigawatt hours per quarter, and Tesla's currently at 2 gigawatt hours, so about a 6x increase from here for the whole battery division if it reaches capacity. Moving to full self-driving, Elon seemed extremely bullish on FSD's capabilities. Still expected to go into wide release this year, meaning anyone who paid for FSD will be able to get it. He reiterated this March of nines and even said that it's close to having enough nines that you may be able to have no one in the car by the end of this year, but without question next year, and they will show it to regulators next year, at which point it will be much safer than a human. Now perhaps Elon gets ahead of himself, but if he's right and he does see the data and trends on FSD's interventions, this could be the fastest switch from something that the analysts think is vaporware to one of the most profitable apps of all time. And this may be why Tesla says in its earnings report that they expect an acceleration in software-related profits. Releasing a wide beta also allows them to recognize a larger portion of the $2 billion of deferred revenue that they have, and by the same token will increase vehicle margins and profitability going forward from that point. In other news, Tesla is also focused on the robotaxi vehicle platform. So many of these developments may be difficult to quantify, but for the first time, Elon Musk says that he sees a path to achieve a market cap for Tesla that's the size of Apple and Saudi Aramco combined, which is about $4.4 trillion, or 7 times higher than where Tesla is today. He made a similar call years ago when he said that he saw a path for Tesla to get to $700 billion, and they were only at around $40 billion at that time, and Tesla did get to over $1 trillion in size. So now he's making another bold prediction and not including the Optimus robot in that calculation. This is interesting because the analysts usually leave out storage and solar and full self-driving and perhaps supercharger networks from their valuations. Elon's valuation seems to include everything except for Optimus, so it might be time for analysts to update their models. And so if you focus on the specific margins or currency numbers that Tesla reported, not only could that quickly improve within the next few quarters, but you might miss the real vision that Elon Musk is seeing, which could lead to some explosive growth for Tesla. So when do you think full self-driving will be ready for prime time? And did you view Tesla's Q3 earnings report to be more negative or more positive for the company? Be sure to have a look at my recent video on Tesla's Dojo supercomputer. Please hit the like button and subscribe. We would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.